Welcome to Wall Street Confidential. I'm Farnoosh Torabi, talking here with Jim Cramer about a little bit of a mistake some investors are making in the market, mistaking good companies with the bad ones. And we should preface this by saying that largely this is
this is
sour market.
What I'm trying to do, I mean, and let's understand each other. It's a horrible market.
Right.
It's a treacherous, horrible market. And I don't always say that about markets, okay? I think that the characterization of me is just an endless bull, which is funny. I mean, I read characterizations of me on Stock Picker, and it's like, well, no one's ever going to learn, so I have to be true to my heart. It's a bad market. Now, within the confines of a bad market, periodically you get so oversold that you get short squeeze spikes. Mm-hmm. So what you have to do is say, well, how much oversold? I use the S&P oscillator. I pay for it. It's all in a few days. I think it's going to be maximum oversold. It's always really difficult to predict that, but we're really at a level where you shouldn't be short anymore. So when we're level, you shouldn't be short anymore. What I like to do would be long something against a short. And what I'm seeing is in the initial phase of a sell-off, everything goes down equally. Some go down much harder. Apple's going down. EMC, which I like. But now you have to start saying, okay, look, EMC is not as bad as JDSU, and Corning is not as bad as, I argue that Corning's not as bad as, let's say, Alcatel-Lucent, okay? That Hewlett-Packard is not as bad as Dell. So these have all come down equally, that Apple's not as bad as Garmin. And now it's time to start putting on either a paired trade or making a stand on a basis going down. A lot of retailers that have great balance sheets are going down as badly as the ones that have bad balance sheets. This reminds me, by the way, of VF Corp versus Liz Claiborne. I mean, I've been saying that VF Corp is in charge of its own destiny and Liz Claiborne isn't. And here VF Corp reports a very big upside surprise. The stock goes up. Liz is not to be owned. And I think that I'm just trying to emphasize at this level being oversold, there are opportunities. The misinterpretation that will come here by our retail investors who watch these videos is that I'm getting bullish. And what I'm trying to say is that there are such things as trades. I'm bullish on gold.
Okay.
I'm bullish on agriculture. I'm bullish on oil. I'm bullish on infrastructure, which is getting hit now because the stocks are up so much. And I'm bullish on healthcare and healthcare cost containment. That's all. That's a universe.
Some tech, perhaps?
Well, only versus other tech
right.
that is going down. But, my universe is between 60 and 100 stocks that I like. There's 6,000 stocks. So people might say, well, Jim's a huge bull. But, I have my sectors that I like.
Well, so trying to just understand how an investor's approaching the market sounds like they're approaching stocks as like a sector. So that retail's bad, so I'm going to sell all my retail.
Right.
And the truth is, when one company comes out, let's say Hewlett-Packard comes out with a weakness, the Dell might have a little bit of a sell-off because that's the relationship people see.
Right, and that's important. But what I'm saying is that various times when we have that price is very important too, and that EMC at 20 is a victim of that. EMC at 15 is kind of interesting. Again, when EMC goes to 19, it may not be interesting. But I trying to give people, as always, and always subject to misinterpretation, I'm trying to tell you what good managers would do. And they'd say, okay, look, VF Corp at 63 is very good. I don't know if I like VF Corp at 70. But people will say, oh, he loves VF Corp. I mean, I don't love any of them. But I do have certain sectors that I want to buy on weakness. Oil, agriculture, infrastructure, healthcare cost containment. I think these are very good. Very good. I mean, I was buying shearing plow all last week. Now here it is. It's up 2.5, and from where it was. And it's like, well, nothing's really changed shearing plow, but the economy's gotten weaker. And what I still like the Cokes and the Pepsis, but they've moved up a very big amount. Altria I still like because it's undervalued. But my point is that I don't like the market, but sometimes the market comes down so much that you have to pick,
right.
And it doesn't mean you can't sell. AT&T's doing badly, Verizon's doing well, okay? So that's a difference. At a certain point, I'll probably be interested in Comcast on a trade because it's down so much. But I'm trying to condition people to a notion that seems very alien, which is that at some prices things are good and other prices things are bad.
All right, that is the lesson here on Wall Street Confidential. For more, check out Jim Cramer's columns on real money. I'm Farnoosh Torabi. Stay tuned. Thanks, Jim.